Last week I said Bitcoin was looking weak. The sellers were stepping in and the downside pressure was building. This week, price did exactly that. Bitcoin broke below support, pushed lower into the next key zone and confirmed the bearish structure we talked about in the last analysis. Now the question is simple. Does this support hold and give us a relief bounce, or does Bitcoin break down again and open the door to another leg lower? Let's break it down. Last week's candle opened at $77,051 and ran to a high of $78,381, and the low of the week was $72,544. It closed at $73,689 approximately, and that's roughly a 4.3 to 4% decline on the week, which is clearly bearish. And compared to the week before, this week created a lower high. That tells us that sellers are stepping in at lower levels every week and momentum is fading. Now, if we switch back to the daily chart and we look at the indicators, starting from the EMA 50, the price is at $76,091 and price is below it. So that line right now is acting as a resistance. EMA 200 instead is at 8,925 and price is also below it, which is the bigger problem here. This is structural weakness on the higher time frame. But the important detail is that RSI is still falling, indeed is making lower highs. Momentum is cooling off and sellers still have control for now. Now let's look at the key levels. Support is sitting around $73,700 approximately. That's the level buyers need to defend. If that level holds, Bitcoin still has a chance to stabilize and attempt a recovery. The next resistance is sitting around 76,800. That's the ceiling the market has repeatedly struggled to break through. If Bitcoin can reclaim this level and close above it with strong volume, then a bullish recovery becomes a real conversation. Now let's look at liquidity. Above price, there's a dense liquidation cluster between roughly 74,500 and 78,000. That's a large concentration of short positions sitting above current price. If Bitcoin starts squeezing higher, the liquidity becomes a magnet. Below price, the heatmap lights up between roughly 72,300 and around 70,000. If support fails, that's the first area I would expect price to target, because that's where next pool of liquidity sits. So the heatmap and the key levels that we identified are telling the same story. Bitcoin is trapped between two major liquidity zones and it's likely going to attack one of them soon. On the macro side, this week the biggest event to watch is the US non-farm payrolls report on Friday. Labor market data has become one of the most important drivers for risk assets because it directly impacts expectations around Federal Reserve policy. If jobs come in stronger than expected, markets may start pricing in higher for longer rates, which could pressure Bitcoin and other risk assets. If the labor data comes in weaker, that could support the idea of future rate cuts and give Bitcoin some relief. Right now, Bitcoin remains highly sensitive to macro headlines. ETF flows have also been weak recently. Over the last couple of weeks, we've seen significant ETF outflows, showing that institutional conviction has cooled off during this pullback. That's not really helping price right now, and fear and greed is sitting currently at 35, which puts the market firmly in the fear category. Historically, this is where retail starts panicking while smart money begins paying closer attention. That doesn't mean price instantly reverses, it just means that sentiment is becoming increasingly negative. On the chart, clearly Bitcoin is currently forming lower highs with weakening momentum. That's not the structure bulls want to see. Until buyers reclaim key resistance levels, sellers still have the advantage. Look, I'm not going to tell you Bitcoin is definitely going to a specific price because nobody knows that. What I can tell you is what the chart is currently leaning toward and what would need to happen for that view to change. Right now, my bias remains slightly bearish. Price is trading below both the 50 and the 200 EMA. RSI is falling into oversold zone. ETF flows have weakened and Bitcoin is continuing to print lower highs. That's clearly not bullish behavior. Now, how a bullish scenario could look like is that once price reaches this support level, tests it and bounces back and breaks through this resistance level at 76,800, it could potentially aim for the next resistance level at $80,000. And that's when I will start seeing like bullish reversal with a bit more of confidence. That's the scenario if support holds and momentum returns. Now, in a bearish scenario instead, if price reaches the next support level and fails both here and here, I would expect liquidation cluster below to get targeted and Bitcoin start moving towards the next major support around $65,000 before any meaningful bounces back develops. That's the scenario if sellers remain in control and macro pressure continues. The level that changes my read entirely is $76,800. Above that level, my bias becomes significantly more bullish. Below it, downside risk remains open. That's the level I'll be watching closely this week. Now, before you put on a single trade this week, I want you to go through this list. Do you have a defined invalidation before you enter? If not, you don't have a trade, you have a guess. Is your risk capped at maximum 1% per trade? If you're still building your edge, keep it at 0.5%. Once you get 2 losing trades or 2 risks lost in a single day, that's it. Call it a day, close the charts, don't make any exceptions. If your account is down 5% on the week, cut your risk in half the following week and review what happened. And last thing, honestly check yourself before you sit down to trade. If you're frustrated, chasing a loss or just bored, walk away. The market will be there tomorrow anyway. Here's your week in one sentence. Bitcoin is sitting around $73,600, forming lower highs with weakening momentum. And the levels that decide everything, in my opinion, right now are these 2 support levels at $71,000 and $17,000. So watch these levels, react to what the chart does, not to what you hope it does. If this was useful, please put a like, leave a comment with your thoughts, and hit the subscribe button below. I'll see you at the next one.